Hi, everyone. Good morning, good afternoon. Welcome to Live with Main Street. Today, we are eager and excited to talk to you about tax season. Happy February. January made its way. It was here with a vengeance for most of us who have dealt with this weather on the East Coast. So we are headed into February and the many joys that it brings to us. So our plan for today is to address the 3 questions that we received via emails about the changes and the things that are happening and the things that are affecting the tax season for 2018 and 2019. So I have 2 special guests with me today.
Hi there. Hi, everybody.
Hi, it's Cynthia.
So we have your beloved advisors, Liz and Jim and Cynthia, with you here today. And I will be tackling the first question before I punt the next one to Jim. And that question is there anything related to the government shutdowns that may impact our 2018 taxes? Very reasonable question. So as we all know, the shutdown ended a week ago, last Friday. And January 28th, which was Monday, that was actually the start of tax season. And so what that means is that's when the IRS begins processing tax returns. So if you had submitted it via a software company or worked with a tax professional, reality is it wasn't until Monday that they were going to submit that information to the IRS. So there are a few different answers to this question depending on who you ask. Will your refunds for 2018 be affected? The Trump administration has come out recently and said that everything will be on schedule. There shouldn't be any delays with refunds. Employees of the IRS, as well as those union reps, recently told the Washington Post that you should expect delays, and it may be as much as a few months. And then really, I would say the biggest answer is this is an unprecedented event. This is the largest shutdown that we've ever had in history. And so with unprecedented events, we have these kind of up in the air situations. So what we will know more of is this time at the end of this month in late February, most tax returns are processed in about 3 weeks. So for the people that kind of submitted theirs right on January 28th, after that about 2-week time frame passes, they'll start to notice whether some of these returns, refunds, whether some of these refunds are coming back right away or whether they're being delayed. So I guess what I'm saying is simply time will tell. It is worth knowing that there are small ways to speed up your refunds that we've always kind of recommended in the past. So if you e-file your taxes and if you set yourself up for direct deposit, those are small little things that you can do to kind of get your refund as fast as possible. And I want to address the fact that the shutdown did not bump any due dates of when the tax returns are due and when you need to have them filed by. So hopefully the person that asked that question related to the shutdown was feeling a little bit fulfilled by my "it depends" answer. Okay, next we have Jim. And Jim, the question that we have posed for you today, what do I need to know as a small business owner? Will my taxes go up or down?
Well, it's the universal, it depends. But the Tax Cut and Jobs Act of 2017 gave C corporations a 21% tax rate versus 35 that had been before, and that put us more in a competitive mode versus other countries. To take care of the small business owner that's typically either a sole proprietorship or a subchapter S or an LLC or an LLP, those are limited liability partnerships or limited liability corporations, they wanted to give them a similar kind of tax relief. And so they came up with Section 199A. Everybody remember that? It's a test question. Anyway, and of course, they just published the rules last week. So all of your tax preparers and tax accountants and tax lawyers are studying up as we speak about how to implement this 20% qualified business income tax deduction. There's a limit, of course. If you make too much money, you can't use it. So they limited it to 315,000 for joint filers and 157 for single filers. But they did put a provision in that if you're in the real estate property management business, you own shopping centers, apartment buildings, stuff like that, you could qualify for this 20% income tax deduction if you spend more than 250 hours in a year involved with the properties. So you can't just be a landlord that looks at the books once a month and has a property manager doing most of the work. That won't qualify you for that. So that's the big change for small business owners. Sad news, sale of a business no longer qualifies for an IRS code 1031 tax deferred exchange. That was eliminated in the Tax Cut Act. And this just came into my radar screen yesterday with a client who's selling a construction business, and there are not a lot of assets that are hard. It's basically contracts and goodwill. You can't do a 1031 exchange into real estate. Real estate to real estate, like-kind property, still available, but that's kind of sad news. More sad news is that entertainment is no longer deductible. You know all those skyboxes they have at all the arenas? Well, guess what? You can't write that off anymore. So it'll be interesting to see if the value of those boxes go down or if people don't care whether they get a deduction or not. But I imagine some people do. However, don't fret. The 50% of the cost of food still is on the books. So you can still write off the 3-martini lunch halfway. And so that's been in effect for a few years. I'll just want to list very quickly the common tax deductions. If you want my checklist, we can send it to you. Just email info@mainstreetplanning.com and we'll send you this checklist. But think about travel as a deduction. We have one client that forgot every time they were visiting their properties, just because their grandkids were in the same town, they didn't write off their travel. You can write off your travel, including cars that you might lease or trucks. Don't forget startup costs as a small business owner. You can even have a loss in 3 out of the last 5 years, but don't make it a hobby. Salaries and wages, contract labor, bad debts, somebody doesn't pay you, supplies, depreciation. You can depreciate that copier that you bought, rent for the office, utilities, taxes, insurance, repairs. Oh, I'd hate to hear that word because usually you have to call somebody quickly and it costs a lot. Commissions and fees, advertising, the home office deduction. Take a photograph of your home office to demonstrate that it's a separate area of your house and not the television room that you turn into an office during the day and TV room at night. That's not going to pass the audit test. Legal and professional fees, meals, but not entertainment, equipment rental, interest on business debt, employee benefits, that's a good one, and mortgages on business property, which doesn't have a cap like personal residence now has a cap of $750,000. So those are the quick checklist items. Don't forget. And I think everybody should have a small business, even if it's only a side gig. You can cover a lot of your expenses that way as long as they're directed towards the business. There you go.
Thanks, Jim. Always valuable insights from you. Really appreciate it. I'm actually sitting in on a session next week where they're covering specifically Section 199A, because I agree it's brought up a lot of news and a lot of storm kind of coming in that direction. So especially with all the information being so new, we really appreciate you giving us the rundown. Okay, Cynthia, here we are. Last but certainly not least, our Cynthia Flanagan. The question is, with the DCJA of 2017, are there any new tax mitigation strategies that we could be taking advantage of?
Thanks, Liz. As far as new strategies, I want to remind everyone to just remember some of the old strategies, take advantage of existing tax credits. And if you need a reminder of what some of those are, irs.gov, there's a tab that says credits and deductions. Definitely take a look, because there'll be some that you might not have thought of, like a senior tax credit for elderly, meaning over 65 and disabled, a retirement savings a contribution credit, and both of those two are dependent on what your AGI is, so you may or may not qualify for those. In addition, there is a residential energy efficient property credit. And if you were planning on going solar, having solar heating, then 2019 is the year to do it, because after 2019, that percentage, 30% of that cost, it gets reduced in future years. So that's the year to do it. There is a new credit. There's a family tax credit. So if you are covering if you have an older dependent, keyword dependent, older is over than age 17, then you could get a credit of $500. So that's something to look forward to as well. Now, typically when people are asking about how to save on taxes going forward, they're thinking of the standard deduction and how that has been doubled for $12,000 for singles and $24,000 for married filing jointly. And they're thinking, should I take the standard deduction or should I itemize? One comment about the standard deduction, though, if you are over age 65, it's possible that you could have an additional $1,300 on top of that standard deduction. So be sure to look out for that one if you're 65 or older. So are you going to itemize? Are you going to use the standard deduction? So one strategy that you can use is bunching expenses and looking very specifically at medical expenses. If you have a procedure that you know you're going to do, going to have some dental work or whatever, you can plan to have that all grouped in 1 year. That way you'll have a higher medical expenses. So those are going to be your unreimbursed medical expenses. Additionally, any charitable deductions, if you want to make charitable donations, you can bunch that all in 1 year, maybe do it every other year. And that way you'll increase the possibility of having being able to itemize and having an amount that's higher than the standard deduction. Now you'll have your state and local taxes. We know that that's going to be capped at $10,000. You're going to have your mortgage interest, and you can actually look at your amortization table to see exactly how much interest it'll be. And if you just run the numbers and you calculate that, then you'll be able to see whether it's a good year to really try to go for the itemization, or if you're just better off using a standard deduction. Now, since a lot of these, especially the medical deduction, is based on AGI, adjusted gross income. Something you could think about is also ways to reduce your AGI, so more of that medical deduction actually counts toward itemization. So how do you reduce your AGI? That's all the pre-tax donations, contributions to your 401k, an FSA, maybe a deductible traditional IRA contribution. And another bonus with that is that a reduced, since Medicare premiums are based on modified adjusted gross income, a lower AGI would also mean lower premiums potentially. So those are some suggestions, and back to you, Liz.
Thank you, Cynthia. Fantastic. The most recent numbers that I've seen say about 92% of people will be doing the standard deduction and about 8% of us itemizing. So when I saw that number, you know, there's been a lot of talk about the impact of that double standard deduction. It sounds like, yeah, using the strategies that Cynthia presented will really give us an opportunity to make the most use of those opportunities to itemize. So here we are. We have come up on time. Thank you for joining us today. We hope you love this as much as we do. We have fun over here at Main Street, and we hope you're having a nice, whether it's sunny or whether it's snowy, we hope you're having a wonderful Friday and a great weekend ahead. So thank you again to Jim.
Thank you. Glad to be here today. I want to remind Maryland taxpayers to be very cautious about itemizing or not itemizing. The Maryland rules are different. So pay close attention to it. There's plenty of articles on the internet to explain the differences if you itemize or don't itemize on your federal, how that impacts your Maryland options, okay?
And Cynthia, we want to thank you too for your time today.
Thank you. Happy Friday.
Bye, guys.